Sunil Subramaniam joins us. Sunil, we know tariffs are coming. What we need to understand is that what is in the price and what exactly markets factoring in on the tariff front.
I think that I would view the situation as a short-term pain, medium-term gain, because I think a lot of the price correction is on anticipating that there will be a very bad news, and hence most international related stocks and sectors are correcting. So to me, I think the pain, right, unless there's a specific unexpected tariff on a particular sector, is largely in the price now. But that doesn't mean that there could be an immediate recovery, because ultimately the situation, Trump, see, look at one thing, Trump relies on creating uncertainty, but Trump always is open for negotiation. And I think the ground reality, if you just take the gaze away from the short-term uncertainty, is that ultimately, until America gets to a stage where they can produce everything for their population, they have to rely on outsiders. Now, the tariff, what it's creating, it's helping Trump reduce his fiscal situation, because the tariffs go as income to the US government. But at the same time, the American public, right, now he's putting pressure on American corporations saying, you're buying raw materials, you're buying semi-finished goods, dare not pass on the price increase to the consumer. So obviously, American companies which are sourcing from countries like China, Mexico, India, they are going to face an EPS pressure. But then when you look at it, right, each of these companies is going to look at alternative destination, but not destination, source from which they will have to source. And I think there, wherever in the short term, I think India's labor advantage, labor cost advantage, supply advantage, cost advantage are the factors which will help us drive this. So I would still say that the uncertainty created by Trump and the severity of his talk, right, is going to make a lot of corporations look at multiple sourcing destinations. And currently, India's position here, I would say, is that while we are one of the highest tariff countries as per Trump's own statement, the fact is that our trade surplus is very small compared to that of China or others, right? So from a Trump perspective, the impact, though he may announce India as one of the people he's punishing in the first round, the open for negotiation and the fact that India has a potential to reduce the deficit by buying oil and defense equipment from the US augurs well for us. So from an Indian stock market perspective, I feel a global uncertainty around the tariff and the trade wars, and the fact that India is among the highest tariff countries is created a higher selling pressure, I would say here, than is warranted from our medium-term economic prospects vis-a-vis the Trump administration. So I think by fall, the trade talks are on. We should come out with a deal which protects us by and large from the tariff, but at the same time, what is our main focus? Our main focus is employment generation. Our biggest challenge for the government of the day is employment generation. Hence, using that employment cost advantage and supply advantage to strike deals where we get some business from them by buy some. So the trade balance will obviously get reset, but it looks at a huge opportunity for a number of, especially labor-oriented sectors in India. How those will plan out, you will know only over a period of time. So I would say that this panic reaction and this correction for India, and we are among the markets got worst affected yesterday, is a bit overdone. There will be volatility for the next few months, but like I said in the beginning, this is a short-term pain for a medium-term gain. But finding the winners at this point of time will be hazardous. So invest in a diversified portfolio of stocks across sectors, and I'm sure that these would turn out to be among the best buying periods for long-term wealth creation. We just have to retain the confidence, and on top of it, you got to understand that Mr. Trump is a businessman, and Mr. Modi also has a businessman-like approach. They have a good talking terms. They have openly said that they are friends. So I think one has to keep that in the back of the mind when you are taking an investment decision. Obviously, anything short term, you can't rule out further correction, further volatility will be there. But if you see, I would say 6 months is probably my time frame, because by fall we expect a US trade deal with India to come through. They will negotiate hard. We will negotiate hard. But end of the day, we have to be a winner, because we are among the lowest of the quantum of, trade surplus with the US, right? While our tariffs may be the highest, the quantum of our trade surplus is not very great, because our export story hasn't honestly been a great success. We have only 2% share of the world's exports. So let's retain that positivity. And I would say take a staggered investment approach over the next 6 months. split your money if you have any surplus right now over the next 6 months. Stick to diversified. Don't try and pick sectors and stocks at this point in time. That's like catching a falling knife.
Okay, fair point. I have no questions left now. You've summarized the first answer so brilliantly, Sunil. Okay, I have questions for Kunal actually. Vodafone, what should one do, Kunal?
Well, it's just a trading bet. After yesterday's 20% plus uptick, I don't see any immediate upside on the stock as of now. But then I think we'll need to see how the stock evolves in terms of the range, because what we saw yesterday was a very strong recovery from 6.5, 6.8 levels to 8 plus mark where the stock closed yesterday. Of course, the volumes, the open interest yesterday swelled up higher, and you see that happening because the stock saw a lot of news flow for itself. But then I think what we need to see is follow through up move for the stock, and then if the stock goes into a mild bit of a correction, say come back to 7.5 odd mark as a pivot range, does it find that equal amount of buying or not? So I think that would determine the near-term uptrend for Vodafone Idea. Again, I think as what we discussed yesterday also, it's just a pure trading play, nothing major in terms of the long-term positioning or the trend reversal for the stock.
Okay, that's that on Vodafone. Want to pick up on some of the other buzzers as well in trade. While there was not a whole lot which managed to hold through, and clearly Vodafone was the big one. But Kunal, you think Indus Towers could be a meteor trade?
Yeah, this could be an interesting chart because, even in this last 2-3 months of the price correction, Indus Towers was actually the first ones to try and recover amongst the mid-cap names. The stock formed a low which was around the 310, 315 mark. The recent high for the stock was around the 350 to 360 zone for Indus Tower. And the stock has been hovering around the 200-day moving average. So when we look at the long-term charts, the recovery from 2023 lows when the stock was at 150 levels thereabout. So all of those patterns are very attractive. The stock now placed at a good retracement point closer to the 300, 320 support zone for Indus Tower. So would be very bullish on the stock. And my sense is that even if we keep a 9 to 12 month kind of a time frame or slightly higher than that, we could be looking at the stock coming back to that 400 to 450 mark, which is the all-time high levels for Indus Tower.
I'm just scanning through. Just pardon me, guys. It's allergic cough. I'm looking at IndusInd Bank. After the linear decline, it seems to be making a comeback now. But where will it settle? Nobody knows. Then it's IDFC Bank. Sunil, is it time now to look at banks which have a high exposure to unsecured category because RBI liquidity is coming back, high frequency data is improving, car sales have normalized, PMI data is improving. So the stress 6 months ago was MFI. Can that be the turnaround point for next 6 months now?
I think it's a good point, Nikunj. I support that. Only thing is, it will be a U-shaped recovery, not a V-sharp one, right? Because remember that the 100,000 crores. I think this is like a horse which has been flogged to death. The tax giveaway kicks in from this month, right? And where is that money going to go? I think that top of the ladder will be using that to borrow more, right? In your EMIs, because that's the leverage effect, right? You add 100 rupees more to your EMI, you can borrow, probably 10,000 rupees more, right? So I think, and that's where I think, yes, unsecured lending is the way out where it will come back, right? And I think, and consumer durables also, right? So banks which suffered the pain, you're right, with liquidity coming back, I don't know, 25 or 50 basis points rate cut is being baked in at this point of time on the 9th policy, as well as the fact that banks have now been permitted to lend back to NBFCs, right? So I think that's a good profitable lending space for banks, and the unsecured lending space, not only will the NBFCs be in the forefront, they'll also get funding from banks, and so banks will benefit in that from their loan book growth. So I think you've got it right in terms of it's a good time to start picking those kind of banks. But like I said, hang on, wait for a U-shaped recovery. Don't expect a sharp V-shaped bounce back. That's my only.
Okay, there's an interesting note coming in on the Indian IT sector. Remember when all of this in terms of tariff and the RBI policy, etc. is done, it's going to be back to reality, and that's earnings, right? And IT will be the first of the lot to actually come about with their list. So as per JP Morgan, their structural preferences are Coforge, Persistent Systems, Infosys, KPIT, LTI Mindtree, and Sagility. what we are anticipating in terms of IT performance, they will see uncertain macro impact for sure, right? And they will display a softer seasonality from a combination of weaker macro as well as, AI deflation as well, which is at play. So it seems like it's going to be a mixed quarter for the large cap lot on a sequential basis. Revenue decline, while mid caps will continue to deliver stronger organic growth. And the range that we are pecking is all the way from 0 to 4% on a sequential basis. Rajesh Palve as well joins in on the show to talk about what his thoughts are on the trading day ahead. Rajesh, hi, good morning. Good to have you on the show. Let's first start with IT because that's looking like the weakest link in the market right now. Do you think it's pegged for a bounce anytime soon?
Good morning. So looking at Nifty IT, it's in bearish trend only, and looking at the Nifty IT index, it's forming lower top, lower bottom formation and slip below to all its important moving averages. Looking at the large cap IT stocks, they are also behaving in the same manner, and most of the large cap IT stocks are also witnessing, a series of lower top, lower bottom formation, and almost most of the stocks are now trading below to their 200-day moving average. So it looks still they may exhibit on the bearish side. Looking at the overall structure, we believe that further more downside is still there for Nifty IT, and we may see further more corrective move. Though there was some recovery in some of the mid cap IT stocks, but not able to sustain at high level, and there is no follow-up buying action was there in mid-cap IT stocks also, and they are also witnessing supply pressure. So I think there could be a probability of another 2 to 3% kind of correction we may see in the Nifty IT index. So I think wait for some bottoming out sort of formation. Still a short built-up is there in most of the large cap IT stocks.
Well, sharp cuts in IT. Infosys, TCS down 15 to 20% this year already. Could it get really bad? I believe that, I was looking at the charts for NASDAQ in the last couple of days, Nikuj, and NASDAQ has started to show signs of a bullish divergence, which means that the fall should get arrested over there for, the IT major index for the US indices. And we know that how NASDAQ as a index has a direct correlation with the Nifty IT index and of course the components of the IT index. So which means that what we've seen in the last, 1-2 months of a sharp price correction, the indicators globally, they've started to look a little bit more better. I would not say extremely optimistic, but at least the fall seems to be getting arrested over there. There is a very strong case that maybe a base building is now getting in place for the IT major, which means that for our markets also, the Nifty IT index, I think the fall or the intensity of the correction, I think that should halt. Even if you look at the IT index on a net basis, say over the last 1 month, we've been into this 2,000 point range, 36,000 thereabouts as a support and 38,000 approximately as a resistance for the IT index. So I would sense that closer to 36,000 or slightly below than that, I think could actually be a very good zone where traders could look at building up of contra long positions on the IT stocks, especially the large cap IT names.
Okay, that's quite an interesting take there. Still analyzing and absorbing all the auto sales which have been trickling in, and Tata Motors, the March sales data has managed to beat estimates for them. There's Hyundai as well, which came out with their March sales data, which were higher than estimates, and it's actually SUV as a segment which actually led the sales for them. So both these stocks are going to be in focus this morning. Other than that, of course, like we've been flagging off, look out for what a Tata Consumer does. Nikun just flagged off after that Goldman Sachs upgrade that came in. They've upped the target price as well. So that's going to be the other stock that we're going to keep on our radars. And there's an interesting note coming in from Goldman Sachs on Trent. So look out for what Trent as well does in trade. And I'm just going to dig out that note for you. And get you the gist of what has actually been said, because they're maintaining their buy and they're pegging the target price all the way to that 8,200 price point. They're saying it's a large positive surprise that one is seen in the Zudio store additions in Q4. There's been accelerated store additions that they've seen in FY25, and they should revive investor confidence in Zudio's long-term potential. So basically the story is really built around Zudio and how it can be really scaled up. Kunal, stack up the charts of a trend for us. What are they looking like? Because this stock has really gotten hammered, right? It's fell sub 5,000, right? And from there it's seen a recovery? Yeah,
I think from 8,240 or that was the high for trend on the upside. We fell down to as much as sub 5,000 levels. The recovery in this last 1.5 odd month has been quite interesting because, it's not the usual V-shaped recovery what trend has been showing in the earlier, the last 3-4 years of a mega uptrend for itself. It's been more slow, more gradual, but the stock is trying to build a base at that 5,000 odd mark. And now the stock is nearing towards two important resistance points. One is at 5,600 mark, which also coincides with the 50 DMA, and the other could be a potential break just about that 5850 to 6,000 mark for trend, which could also be the 200-day moving average for the stock. So when we see this kind of a 3,000 plus point of correction for the stock and then a gradual recovery from sub 5,000 levels, we expect that the stock is going through a very gradual and a subtle uptrend. Yes, there have been phases in between that the stock sees a certain bout of volatility, certain jump in the prices in terms of volumes. But then on a net-to-net basis, we see this more of a very slow and a gradual uptrend. And sustainable trends are the ones which are very slow, gradual, and they tend to last a lot for names. So bullish on trend from in fact, I've been bullish in the last 1 to 2 weeks. Maintaining that stance for trend from current levels and expecting the targets to be closer to 5850 over the very short term.
Okay. Rajesh, power stocks have also seen a remarkable comeback. Suddenly NTPC is up 10-12% from the recent low. Tata Power has stopped falling. This entire cahoot of power utility and power generation seems to be back on track. Technically, Rajesh, which is the strongest power stock?
Yeah, definitely. So we have witnessed smart, accumulation activity in most of the power stocks, and most of the power stocks are, formed a bottom for the near-term perspective. NTPC is looking promising. The way stock has shown really in last couple of weeks, now stock is comfortably holding about to its breakout level of 345. So I think if it continues to hold above 345, there is a possibility that we may see furthermore continuation of upward momentum towards 365 to 370. So NTPC is looking very attractive. Again, on the Tata Power, stock is witnessing some supply pressure around 100-day moving average, which is placed at around 380. But looking at the near-term structure, I think still strength is there for the near-term. Once stock crosses about 380-82 zone, I think here also we may see some upward momentum towards 395 to 400 zone. So Tata Power also can be looked at to buy with stop loss of 362.
Tata Power is also one stock which is going to be in focus this morning. Coal India, their March provisional production is actually down over 3% on a year-on-year basis. Although they've enhanced the coal prices by about 10 rupees per ton. So that's definitely going to be another stock which is going to be in focus as well this morning. Look out for what it does in trade. Other than that, of course, there's Hindalco. The India business capex has increased about $5 billion from $1 billion, and Novelis's guidance has been maintained. So that's the other stock which is going to be in focus. SBI Cards, wherein the total spends for the month of February have seen a downtick of about almost 9.7%, and the average spends per card also has seen a downtick of about almost 10.5% on a month-on-month basis. So that's going to be one stock which is going to be acutely under pressure, perhaps. For MCX, that's the other stock. The transaction revenues, they've come in lower by about almost 4% on a sequential basis, and the average daily transaction revenue is also managed to miss the estimate. So look out for what that stock as well is going to do in trade. Having said that, the one excited stock yesterday was BSE. The fact that they're going to be announcing a bonus issue, that kept the stock a little bit warm, while it closed a little bit off the day's highs, but still in a weak market like yesterday, I would call that outperformance for sure. Rajesh, what are you reading on the charts of a BSE, of an IEX, of an MCX, CDSL, etc.?
So most of the capital market related stocks have done well, like BSE, MCX, and CDSL. All stocks have done well in last couple of weeks. BSE is looking very promising. The way stock has moved up in last couple of weeks, and now it's a kind of V-shaped recovery is taking place in BSE. So I think if its stocks continues to trade above 5,300, I think there is a possibility that stock may again attempt to move higher to negotiate with its previous swing high of Feb 2025, which is placed at around 5,950 to 6,000 kind of zone. So I think there is still room for further more upside. So those who are already long in trade can hold the position with stop loss of 5,300. Again, ICX is also looking promising after really stock is consolidating since last couple of days above 50-day, 100-day moving average. So structure is bullish for IEX also. Any breakout above 182 level can take this stock further higher to 195 to 200 zone. So I think here also one can initiate long trade with stop loss of 165. Another stock, as you mentioned about CDSL, here also stock is attempting to negotiate with its 50-day moving average, which is placed at around 1230, 1250 zone. So once the stock crosses about 1250, there could be some short covering action we may see, and then possible rally can extend towards 1300. But at this moment, I think one should wait for 1250 level to cross. Then one can initiate a long position in CDSL for upside target of 1300 to 1340.
Okay. Bernstein is saying the solar companies are available at a price of gold. Please avoid them. Sunil Subramaniam, renewable is become this hot go-to space, right?
Yes.
Some of these companies have really done well for themselves. Wari, Premier, Acme Solar. What are thoughts on this entire power transition theme?
I think it's from a medium-term perspective. I think it's the new UPI. I think if you see the transformation that UPI caused in the payment system and the banking system, I think on the energy system, because see, we are for struggle to find domestic gas resources or oil resources. We're still importing 83% and we are in the fluctuating situation. So I think that India has set a very ambitious goal for itself on the sustainability part, and I think almost 500 gigawatt of power is planned to be brought in there, and the government is going to go all out to try and incentivize this. So I think that we'll see a lot more action on this front. Yes, the valuations today are quite high and they reflect that. So I think the right thing to do is to take a medium-term perspective and stay invested in this sector, because these are going to be the multi-baggers of the future. But then, because a lot of this in the news, right? The price comes in the news. So you, from a short-term gains perspective, you could see these being flattish. Some days when oil price drops, you'll see a correction in these prices. But if you just hang in there and wait, and I think energy is the key driver. If India is to get into double-digit GDP growth, massive energy requirement, we just don't have the fossil energy resources to cater. And the more and more we import, it affects our currency, trade deficits, and everything. So I think that we have no choice but to be the leader in this whole solar global alliance, which is the position that we have taken. And I think a lot more incentives, a lot more infrastructure support from the government are going to see a massive boom. So I would say, just like you saw the Jandhan plus the Aadhaar mobile revolution with the UPI coming, I think on the energy sector, I think this is going to be a big, big driver. It's a larger universe, of course, of EVs and everything else in it. But I think that definitely it's the new India. If you look at it from a stock perspective, it's the new India stock, like UPI was earlier. And I think that the potential is tremendous. So these are things where you don't look at near-term EPS growth, near-term valuations. You look at the massive potential, and obviously you stay diversified across companies in this sector. Don't try and pick a winner within this sector. If you stay diversified, one of them, there will be a massive mergers and acquisitions, and there will be a few winners coming out. But if you diversify, then you're sure to have the winner in your portfolio. So I would say, yes, as a bet on the future, this is probably among the number one things that you should look at.
Just looking at the general sense in terms of what the auto dispatch numbers is, and let's look at it. Maruti 2 lakh has now become the base. Naya normal ho gaya. Like, in and around 2 lakh cars is what Maruti is selling. No Maruti sales numbers, please. That's the auto index. Why would we look at auto index? Let's look at Maruti dispatch numbers which have come out. And if one really tabulates the sequence in terms of what Maruti, has done in terms of auto dispatch numbers. Dispatch numbers, please. How's the stock looking? We've spoken about Maruti a lot of false starts actually.
Yeah, even at current levels, Nikunj, it's a false start for Maruti. Just last week or the week prior to that, the stock was at 11,900 levels. It was on the verge of a breakout, but yet again the stock just fizzled, or the breakout fizzled, and we've seen the stock coming back to that 11,400 to 500 range. So it's not as if that the charts are very weak, very bad, very negative. for Maruti, but it's just that the stock has time and again over the last many years given those or have come very close to those breakouts, but those breakouts have been very muted for a stock like Maruti, and with the pedigree the stock has over the last 10 years, 15 years, and the potential the stock has exhibited over the last decade and a half, it still is a mystery why the stock has been just unable to convert any kind of a breakout into any kind of a major trend. Now, on the short-term basis, for example, when you look at the stock, it's trading just above that 200-day moving average or closer to those kind of levels for itself over the last few weeks. The stock had a much more lesser correction as compared to the other four-wheeler names. But then even prior to that, when in 2023-24, when there were breakouts for many of the stocks which run up to for example like M&M, with the stock moved from 750 to 3000 plus levels. A stock like Maruti has underperformed in that context. So, I would sense that the stock is going through a major multi-year consolidation, and I think wouldn't be surprised that for the next maybe 12 to 18 months, the stock would remain into this pivot of 11,500 to 12,000 as a pivot support for the stock.
Okay. That's that. The other thing which is really being loaded in the market is the kind of liquidity infusion that RBI has been doing. They're going to be conducting an 80,000 crore rupees worth of OMOs of government securities, and it's going to be over 4 tranches, which is going to be 20,000 crores each. So yeah, liquidity is something that the RBI has surely been focusing on. But Sunil, what's your assumption in terms of once the tariffs are out of the way, the announcement and the implementation, what the central bank stance is going to be when it comes out with its policy soon enough?
I think that whatever be the tariff situation, it's given that there's global uncertainty and global realignment of the whole trade thing. So I think that overhang on the Indian GDP growth will be a factor that the RBI governor will take into account. Second is that, this liquidity you talked about is a very positive move, because the earlier infusions of liquidity were more to compensate for RBI's own action in defending the rupee. They had sucked out liquidity and they were replenishing it. But this latest move, because now we are past the March 15th advance tax liquidity outflow, all of that is now over. And with now a liquidity, it's now a positive liquidity infusion as opposed to an earlier was just redressing the liquidity shortfall created by RBI. So that's a very positive trend that the RBI is adopting. The third is that I think one more rate cut is definitely factored in April 9th. And I think the liquidity combined with the rate cut, right, is I think the key thing for transmission of interest rates cut to the mass market, right? So I think liquidity is a key driver there, and I think RBI's very positive approach gives me confidence that there will be now rate transmission and EMIs across home loans and consumer durable loans. All of those should come down. So I think the RBI governor, from all his statements and his action, seems to be very pro growth supportive, right? And I think to that extent, if you recollect, in the previous regime, right, liquidity was very tight, kept very tight, and some people attribute the slowdown in the growth partly to that. So to that extent, this is a welcome change in the approach of the RBI, that they're going ahead of the curve and infusing liquidity, putting in rate cuts, and inflation has supported them. In fact, the rupee also has supported, because there was a strong, since the 1 week FIS had brought in money and all, there was a strengthening of the rupee, so they didn't need that much money to fight the rupee also. So I think all things are now conducive, global uncertainty, reducing inflation, to support a rate cut and a liquidity infusion, which would augur very well. And I think the markets will also respond well if the rate cut is 50 basis points instead of 25.
Okay, let's see whether it's that exaggerated a quantum or not. But Sunil, good to have you on the show. We'll let you go on that note. Well, as we await the MPC outcome,